Welcome back to SatoshiCryptoMoto, crypto, coffee, and commentary. Right now we've got no coffee because we don't need it. Economic collapse snapshot. This is going to be an extremely important video. Within it, I'm going to discuss what's going to happen tomorrow, in the near future, and in the longer term, say year and a half, maybe in 5-10 years down the road. And I'm going to talk about essentially two fundamental different things. Number one, what is the traditional financial system going to do, and what are people going to do? And also the second thing is the very important fundamental dynamic shift in the financial system, and how the Bitcoin and crypto financial system has had a very direct fundamental shift because of it. So to backtrack here, well, first I just want to say, if you know anybody, if you have a friend who has the coronavirus, if you could please just drop a comment in the comment section below, I would really, really appreciate it. No names, please. The reason why I asked that, I don't know anyone personally yet, and I haven't even heard of anyone who has, but I really would appreciate knowing that. But what I want to do is just backtrack to December of 2018. It was the worst December in stock market history in 87 years. It kind of signaled rumblings and instability in the financial markets, but still the U.S. dollar was very strong. And even after the rumblings we've seen this week and the last 2 weeks, the U.S. economy is still stronger than any other country on earth. But the policies that the Fed has implemented to prop up the economy, they propped up prices. I'm not going to say that they were good strengthening to the economy or even to companies, but it has been policies that have propped up prices. So the U.S. dollar has still been strong. They had some percentage, they were in the 2+ percentage rate as far as federal funds rate, so they had some room to go down, whereas pretty much the rest of the world was, we even started seeing negative interest rate policies, which was unheard of in history before. But the U.S. still had some room to go. But fast forward to March 4th, to 2020, they dropped the interest rate 50 basis points, or a half a percentage point. And then on March 15th, which was a Sunday, which was incredible. I mean, think about that. They dropped the interest rate a full percentage point. Now, on March 4th, because of the half percentage point drop, that signaled a tipping point in economics in my mind, because what ended up happening was that later on March 12th, the Dow Jones Industrial dropped 9.99%, which was the largest sell-off percentage-wise in U.S. history for 33 years. So on Sunday, March 15th, the Feds come out and drop it another full percentage point. And I want to back up a half a step. So they dropped it a half a point, and the markets were just, hey, we don't care what you do. We're not even going to consider that. Huge drop. Sunday, March 15th, they drop it 1 percentage point. And then the market drops the third largest percentage drop in history. It was like 3,000 points almost. And so we went, 1987 was the only other biggest single sell-off percentage-wise, and then also going back to 1929 was the only two other days where we had a larger sell-off. So again, the market signaled, even though this huge policy change to create an influx of all this money, everybody's still selling off. Now, today the markets went back up like 1,300. I understand that, I get that, but there's this huge whipsaw, huge volatility. So in the meantime, what did Bitcoin do? I mean, on February 12th, 2020, it was at 10,202. On March 12th, 2020, it was 3,858. That's a 63% drop, a 62% drop. But there's a bit of a difference in the two markets. In the stock markets, they have these stops or halts. But in the Bitcoin and cryptocurrencies, there's no stop or halts. When people start selling, man, they just don't have that. So that's one reason why there was still a huge drop. But since the $3,858 Bitcoin on March 12th, it's gone back up 41%. But the fundamental difference that we've seen is that the tipping point in the American economy is that, hey, the markets say, hey, we don't even care what the Fed's policy, we're going to ignore that for now. And then the converse reaction was that even though Bitcoin was going down, what we've seen is that the reason why it's going down is for completely different reasons. It's not because people don't believe in Bitcoin and cryptos. What was happening is there was a large chunk of money that was in Bitcoins that was institutional investors. Retail investors are you and I. Institutional investors, even people who have large investments in the stock markets, they started having to sell off. But what happened was we've seen that retail investors like you and I have been buying up that sell. And so it really, I mean, it's an interesting and very, very important thing for us to understand. So what does that mean for us? What it means is with the interest rate policy of the globe being negative in some central banks, and now in America with it being essentially zero or less, I think they're going to experiment with negative interest rates, in America themselves. So with people, the general populace in America and even abroad, after a certain amount of time, they're going to say, well, I'm not gaining any interest on my money if I put it there. I mean, it'd be better off putting it in my mattress. Well, let me look at other options. So after a year or 2 years or 5 years, 20 years, we will see a shift of the global populace. You and I, we will be shifting into cryptocurrencies. Now, in the meantime, what's going to happen very shortly is that CBDCs. What's a CBDC? Central bank digital currency. If you don't know what that is, you're going to be hearing about it very soon. What they're going to, I mean, they've already been talking about, hey, currency is dirty, it's got coronavirus on it, it's dirty. So right around the corner, they're going to be saying, we're going to implement a central bank digital currency. We're going to phase out greenbacks, money in your pocket, and we're going to go all digital. And this isn't going to mean anything, really. I mean, it'll be a change in practice, but it's just a digital version of a financial system that isn't working right now. It's unsustainable. It's worked for 100 years for central bankers and corporations and the rich and powerful, but what we're going to see is that, well, let me back up a half a step there. Google Mark Carney, Jackson Hole 2019, and you'll see something very, very interesting. The central bankers, what they do is they kind of send cryptic announcements, and they essentially tell us what's going to be happening. And this is a practice that some of us have known about. But what Mark Carney did, he was the governor of the Central Bank of England. He suggested at a lunchtime speech amongst a symposium of global central bankers. He says, I think the IMF should oversee a CBDC pegged to the dollar, the Japanese yen, the euro, and the British pound sterling. And so I think that is something that we're definitely going to see. I remember an article that I responded to and I wrote about when I saw that the Feds, it was, I want to say about 10 months ago, in 2019, it may have been in 2018, but they said, hey, we're going to come out with the Fed now. It's a digital version. And I was just cracking up. They said they were going to bring it on in probably 2023 or 2024, 4 to 5 years. I mean, that's an absolute eternity in the digital cryptocurrency age. But now I think that's going to be spurred on to a much, much, much earlier, it's going to come about much earlier. So the Feds announced that they're going to do like 1.5 trillion with a T of influx of money. And for you and I, that may account, Trump was talking about 250 billion to every American, and that amounts to a whopping $764 for each man, woman, and child. Now, that's not life-changing. But what's going to happen is most of that money is going to go to prop up the economy and to the rich and powerful and those who are closest to the money printing. And what that will mean in turn, after all that money is infused, then, well, have you ever heard of a $1 trillion bill? Google that and you'll see what they did in Zimbabwe. I actually held one of those in my hand once, but the likelihood is after all this money goes into the economy that it will cause really, really high prices. When you think about it, I saw a report very, very recently, Forbes put it out, they said that the poorest half of the world, which is about 3.8 billion people, their wealth collectively as a total is 1.3 trillion. So for one nation, America, to say that they're going to put 1.5 trillion, it's just an immense amount of money. And so we're going to see some crazy things happening. I just want to encourage you to be very decisive, get a lot of, do a lot of thinking, get a lot of other thoughts and perspectives on it. I really wish you well. I wish you health. I wish you wealth. And hashtag love all serve others. And until next time, peace.